everybody. Welcome to the stream and welcome to Sell-Off Thursday. Well, that's at least how it looks at this stage. So, guys, kind of what we expected. Yeah, a little bit of sell-off at the resistance. Will we get a major turnaround? So we'll go through the bullish and bearish sides here into the close. Obviously, a lot of selling that's come across the board. And if we scroll down through the right-hand side here, you guys will see many red companies. So here's all the red. And here's what's happening on the markets. Should we be concerned? Should we be worried? Where do the bulls and the bears win? That is a question a lot of people will be asking. Well, John becoming a member into the stream. Thank you so much, John. Appreciate it. Thank you. And hopefully you enjoy some of the extra little perks there, depending on which membership you've taken. Let's move over here to the US 500. We'll talk about this to start off with and really some of the key points where the bulls and the bears will be involved and how they're going to be looking at it. Firstly, we're at the resistance. We knew that. We suspected that there might be a little bit of a sell-off. And this is actually pretty much the exact area or pretty good area where you would expect it to maybe find some turnaround. Remember, most good trends, think about over here, they start, they rally, they sell off a little bit, and then they rally again. And they always seem to come off very similar areas. If we look at the US 100, you'll notice exactly very similar. 2050 hits the resistance 16,000, hits the 2050, sells off, then we see that rally. This is what we call the lightning bolt. And this is really the change of trend coming off the trend line itself. Now, if you're looking at the bullish side, that's what you're hoping for. So you're hoping for now a new peak here. If we do end up getting a new peak here, it's a big deal. That will push us all the way to 16.5 in technical terms. And that's really going to be quite a large amount of movement. So if we actually break that down and we break down how much you'd make, it's about that 3% idea to the next resistance from a technical side. If you're a bear in the market, you could be getting excited because if the right things occur, and they have to occur, then we could be in for a big bust if it gets underneath the big trend line. So we have our huge trend line here. We suspected it would bounce off this zone earlier in the week. If we manage to bust underneath this zone and close, you know it's significant, you know it's massive. I mean, that's going to be a close underneath the trend line that has now held up since September 2020. And there is no bigger deal than that when it comes to the market itself. So guys, this is the zone here. This trend line here should be on your charts. You should be watching these trend lines and you should be very well aware where these bounces are. And the biggest indicator out there right now for weakness in markets is going to be this. So basically that weekly 20 moving average. We've been slowing down in the rally, which you can expect. We've been slowing down the rally, but really until the market is underneath the 20 weekly moving average, you cannot really be incredibly bearish on the market because every single one of these rallies has been met by buy demand. So only after you get underneath this level can you really say, okay, cool, the bears are in full control. What do you guys think in the chat though? Let me know. What are you guys thinking about at this stage? Nadir says, love losing money, it seems. What's up, Nadir? What's going on there? Snapped. We'll take a look at that a little bit later. Let's see what everyone says. We always tested the trend line multiple times if we hit it once. So I guess it goes up to some new highs. We've tested the trend line plenty of times in some of them, but there's been some rip rallies. I mean, here's a rip rally that hit a new peak and didn't come back and test it multiple times. So I think that's not necessarily true. The big thing is really when you're thinking about it, it'll be a peak, a trough, a lower peak, and a lower trough should it get through here. But you guys can see it's a bigger picture play. And if you watch yesterday's video, we suspected that you would get pullbacks down to these kind of levels. And that the reason why is because any good trend will kind of make this movement. Is there a good reason for why it comes down? I'm sure someone's come up with some reason. We can go and have a look here at the news, go over to the FinViz, scroll through here, and it says stop mixed after weekly jobless claims inch up. Yeah, whatever. Market starts to look beyond inflation, rate hikes, whatever. I mean, these are weak excuses. So we know that it's just the standard movement of the markets. All this type of stuff is just made up headlines. And of course, they're trying to find a reason for the market to be moving up or down. In general, it will just move this way based on all of the previous types of things that have usually occurred, which is you get a rally, you get a pullback to scare everybody out, and then the market will try to do that turn. And when you get excited is where you get the new peak, because that's when you put that lightning bolt in and things are looking a lot better. Bobby Chang says Tesla is killing me. So let's have a look at Tesla, down 6%. Is that really hurting you that much, Bobby? I'm surprised. I mean, this is kind of, again, one of those main daily style moves. I mean, this is the trader's stock. We have to expect upwards of 10% moves in a day on this stock at this stage. We hit that resistance. We're selling off from that zone. Where's the key supports here for Tesla? Well, we're still at the 1,000. I mean, we know 1,000 is the key support of a psychological number. In the middle here, though, anything can happen. I mean, once we hit that 1110, we knew that that was going to be a bit of a resistance area, and we've come back down. So let's have a look at it on the smaller time frames, get a bit of an idea of the smaller turnarounds. What's going on? Let's have a look. All right. So really today's trade's just been mostly down. Then it's found the support here. You'll see pretty good actual shorting opportunity here where you get that shooting star rejection. That shooting star rejection then falls through, and that's what's caused that further sell-off. I mean, that's a nice little support and a decent little day trade within it. And that's what probably you're really looking for with the markets at the moment, is to recognize something like Tesla is a very tradable stock with large moves on it. Something like here would be big. Something in the morning would have been quite large as well, being around that 1110 area. And the high of today was 1115. So we had 1115. We effectively sold off that zone and moved on down. Where to next for Tesla? You would think it has to hit the 1,020, if not $1,000. Jeff says market in general seems to be lacking any positive catalysts. Yeah, but that's just all made up stuff in the general way of moving it. Usually it's mostly an excuse. Let's have a look at some of the key big things though. So IWM's interesting. It's only down 0.71%. So while the US 500 is down 1.2, where the US 100 down 2.2, the Dow, look at that, only down 0.39, and IWM only down 0.7. A huge difference. So is this an across the board sell-off? And the answer is absolutely not. And again, this is something that you want to be looking at during a time of seasonal weakness for technology. If we bring up this chart, let me just bring up the sectors right now for the day. Here's the daily. Look at what's leading the charge on the way down. So we've got here software down 3.89%. Biotech, obviously highly volatile, that one. Technology itself, XLK, solar, all these hyperstock style sectors are the ones that are down. Whereas something we've highlighted this week quite heavily, something like Jets, which is more of a recovery play, more of course, a separated sector. See how it's not doing that badly? And this is why sometimes it pays to look at the sectors within sectors. And if you think about it, you know, not everything is down as much as you would suspect today. Tesla makes crypto look dull, says Gareth. Well, yeah, Tesla is effectively the crypto of the stock world and the large mega caps. You got Zach here saying, "Hi, Tom. I've followed your work for quite some time, silent majority, and I just want to say thank you for providing such excellent TA. I love the approach and candor. Appreciate it, Zach. Thank you very much. Great to have you here." All right, let's scroll back over. So US 30 is down. It's down 0.4%. Looks like we're selling into the close here. US 100, you expect to find support around this zone here, which it's coming up to at this stage. So you can see here, we had previous supports around this area, and this should be where the sell-off is met by some kind of buyer demand. So around this zone here is where you expect the US 100, the tech, to actually find some kind of buying. But just remember, should it get underneath and close this level, that's not a fire drill. That is probably the real deal from the bear side. And that's where we have to realize that all of this bullishness, buy the dip, it actually kind of fails here for at least the short term. That's how big a deal this zone is. It's not a sell-off across the board, guys. It's not an epic crash across all markets because the Dow is not down enough. And the big stocks, there are some that are still in improvement. Marvin says all those financial journos have to find a narrative to write about and explain what's happening on the day. Of course they do. Of course they do. The news narrative is just an attempt at exploitation, guys. Well, yes, of course. The news is always going to be one of those important things. Let's have a look at yields. Are yields up? Are yields down? US 10 yield actually, 10-year actually down 2.2. The 2-year yield just floating around 0.893. So you would think, oh, well, that's not necessarily the negative component of today. TLT bonds have moved up because yields have gone down. And look, this can be sometimes seen as a flight to safety. Bonds are starting to move up off the key support here of previous resistances and supports. And maybe bonds do go a little bit higher. But just remember, this is fairly normal. It's not a huge move. VIX underneath 20, but basically hitting that. This really tells us that we don't necessarily want to be swing trading in this market. Remember, when the VIX goes above 20, you don't want to be swing trading, guys. And most of the last couple of months, swing trading hasn't necessarily been the best if you haven't been sector pulling. So you haven't been looking at specific sectors. If you're someone that's always looking at technology, never forget. And for anyone that's just coming in right now, you've got to look at these charts. Don't forget this chart. Don't forget the averages of technology over time. Weak January, weak February, relatively weak March, historically for technology. But what do you get then? Incredible April, pretty good May, amazing July, and then sometimes a serious back end. We are almost starting our full earnings as well. So we've got earnings coming in. That's going to be a big deal. Remember, earnings season happens every quarter. It's about to occur. We're going to be starting off with many big players. And of course, the banks will also be there. So when we're thinking about JP Morgan, one day, and we'll see its earnings result. Does this look like a weakened market at this point? No. It doesn't just yet. JP Morgan, one day we will have earnings. It's going to be a little bit scary to see what happens here, but not every sector is the same. Let's now scroll through some of the stocks that we're looking at here. We've got that Tesla obviously could move down to 1,020 quite easily. Nasdaq about to hit pretty major support in terms of where we expect it to start to bounce off. And US 500 is kind of floating in that limbo at this point. VIX above 20, meaning we should only be looking at scalps, day trades, and investments. And swing is going to be very tough above 20. If you've ever wondered, why do I get ripped? Why do I get destroyed during the market pullbacks like this? If you're a swing trader, often it can be because the VIX is above 20 when you're trading. It's a bit of a rule that I learned quite a few years ago. And I would think that it helps quite a lot of people there as well. We also do have a special announcement. I spoke to Ulrich, and he will allow me to share one of his stories of being part of the community, of his journey. So he's written that, and I'm going to be talking about that in a next session. So let's keep scrolling through some of these stocks. Let's talk about some of them. So hyper stocks still remaining down here. Square back to 136. No turnaround story yet on this. And we've detailed this very, very heavily, why there's been no turnaround story. Apple, this is always seen as a major indicator of market strength or market weakness. We've got that weakness coming in, but again, nothing until it comes underneath the daily 50 moving average. That's going to be where the true weakness is. At that point, you'll be doing peak, trough, lower peak, lower trough, and of course, the true weakness will be in a full channel movement. You'd expect it to go all the way down. At this stage, just a bit of a pullback. New peak here, probably ahead of earnings. You're expecting it to breach the top. So there's going to be two great scenarios here on Apple, depending on how we trade it and what indicator we get. Amazon down 2. Microsoft down an amazing amount, actually down 4%. Take a look at this. Microsoft hits the support earlier in the week again, 12 days out from earnings into seasonal weakness. Let's have a look at it on the weekly just to get a bit of an idea of how bad Microsoft looks. This is the worst FANG stock look at this stage. Why? Because I was a bit dubious here on the weekly 20, but of course it had cracked it before. This thing looks like it's coming back down. Microsoft possibly overpriced here in the markets, coming back down to the 50 moving average. What do you guys think about that? You think it's going to get bound down there? It's going to push it back to a price of around 286 and possibly wick down to 280. Looks very weak. Terrible. Any setups? We'll go through a whole bunch of stocks in a second. That Microsoft chart, though, is quite surprising how bad it is. RK continues to decline. Remember, while we are bullish on the concept of turnaround this year in 2022, we have to find the base. We have not found that yet. So we're bullish on hypergrowth as a concept. We don't know which month of the January, February, March we're going to see the turnaround. And anyone that just goes in there and says, oh, bullish concept, let's buy, be prepared to not hit the low. And conversely, when you're waiting for the low and you're waiting for the turnaround, you won't necessarily get the lowest price. I'll give you guys an example here of BHP in Australia, which is something that I followed heavily last year. And this is it here. What a fantastic base, okay? Look at the result of that base. When everyone hated this particular stock, when everyone hated this sector, and it had a base like this with the volume the way it did, this is what you're looking for on something like an RK. It's one of the styles of recovery. And something that I talk a lot, it's actually my favorite play. It's my favorite type of position, these recovery positions. And for some of you guys in the chat right now, there's over 576 of you. There's a few of you that have done the private group mentoring. Let the guys know about recovery plays and whether that's changed the way you look at markets. Because when you wait, when you apply scaling, which Ulrich also has done, which has revolutionized his trading journey, completely changed it, which I think is awesome, then you will have more success. If you're wondering or giving up hope or losing in trades and you're thinking, oh, I always lose, I always make these positions, I'm telling you, 2022, guys, any year really, practice. Number one, bring in scaling to your trading concepts. Bring in confirmation to your trading concepts. It's not 2020, 2021 anymore. Do not expect as easy buy crappy stock goes up, me make money, me ape. It's not going to be that easy anymore. And you can tell because what 2022 could be like, scroll back in history here. Let's go back to the point. Well, this is actually not enough chart. So let me just go SPX. This is my suspicion for 2020. to. My suspicion is this type of year, where we actually saw a movement that was sideways from where we were previously. So we had this big rally up. We started talking about really removing a lot of, changing interest rates and doing all of those types of things. And the market had a trading hissy fit for about a year and a bit. Now, there is good opportunity in here. Just remember, though, while we might grind higher, this is the type of thing that occurred once before and could occur again. What does the chat think? Do you think we're going into a 2015, 2016 kind of year and then we see some amazing growth? Or do you think we just continue to bull out of control? What do you guys reckon? Kangaroos have control of the market. Yeah, Gareth, that's pretty true. Up, down, all around. They're hoppity. They're hippity hoppiting. Can you guys see, though, that things like jets, things that we've been focusing on the week that and you would know if you've been following the channel for a while, I actually dislike very much this sector. But when it provides opportunity and you see a turnaround, that's the type of pattern that you go, oh, okay, everyone dislikes this sector, but it's showing so much more strength. And hopefully it continues up. I mean, this is certainly showing the first signs of major recovery. And then we have that downward trend line where if it breaches, we show the second major. Let's see what everyone thinks about the idea of markets going through. Mark Wilkins says, agree. Chronic 1K says, I am full bull. Hot Potato Trader says no. Trio says yes. John says yes. Hot Potato says, I am a full bull. Get rid of that sideways action. And then we've got a few people asking about dividend stocks. This is August 2015, says Trio. Okay. And then Gary says, nope, more like 2018, but not exactly like 18, just the latter end. Okay. The latter end was pretty brutal, if I remember rightly there, Gary. It was like trade wars and pretty large pullbacks. Well, because we have 5 minutes to go, let's scroll through some opportunities, see if we have anything into the close here. As we mentioned before, Microsoft's into the support at the close, but I'm not really won over by it. The Sp500 is falling. The Nasdaq has come down to really where it should start to find buying pressure. So that is an area here. You would hope this actually rallies. So here's the fall off. We just spoke about it and put a line in there. This is where you would hope there is a rally into the close. So we'll find out whether that occurs in the next 5 minutes. Scroll through some stocks. So all the biotech stocks are going to be down fairly hard. Things like Beam are on support. So they're all on support, but really they're all for next session buying. So you look for that 5 minute, 1 minute turnaround after hitting these closes. The idea of the close is that you often will find into support. You can find sometimes some critical levels. Like if we breach above here and we had a double bottom in play, that would be where you would take it into the close, scale into the concepts, and then hopefully by the time the next market day it opened, it would be gapping up. So that's why you look at the close. Right here, we have supports across a lot of these stocks. Let's see if we have anything else here, though. That's really good. CRM, no. TDOC back down to pretty key levels. TDOC now, if you're looking at it, you're really just looking for this turnaround here. Basically, 87.92. That's where you're going to put that double bottom base in, breach the previous support. That's going to be a big deal for it, for buyers of TDOC. So it's got a bit of work to do on it still. Beavis and Butthead, Australian $5. Markets will remain tentative with current administration. Real bulls take control with new commander-in-chief. Okay, thank you, Beavis, for the donation. Appreciate that. Let's keep scrolling through. What do we got in Nvidia? Nvidia definitely looking much, much weaker. So take a look at this. Comes back up, hits the 2050 moving average. Are we going to see Nvidia go all the way back down to 230? Still trading here at 664 market cap. Not a good look for it in today's session. Roku, new low, so nothing there unless you're bearish. These are all looking bearish still, guys, these ones. DKNG looking bearish. Airbnb hovering around the zone. No clear buy signal on something like that. Intel, not too bad. Surprisingly, Intel actually looks better than you would expect. So here's Intel. It's actually coming back down to the support. Intel not too bad at all. Could actually continue up. Spot, we can see where it is on the weekly. Daily, not much for it. Netflix moving right back down here. Again, underneath support. Netflix may move all the way back to 480. It could very much do so. If this actually turns out to be a real bear bust and we get underneath that daily hammer in the weekly channel, you know all of these stocks are going to be very, very weak. PayPal continues to just hover in its accumulation base. So here's PayPal back at the support. Earnings coming up in 19 days here for this one. Just remember, yes, I like this base a lot. Where do I want to take it personally? In my opinion, above here. That's my opinion. It's a BHP style position. Increased volume, increased transaction. I'm not going to pick the base. I'm going to pick the recovery. Remember what the Wolf of Wall Street says. I don't even like the guy that much, but what the Wolf of Wall Street says is he tried to take the participation phase. So when he was doing trading rather than his other stuff, the way he looked at it was he wanted to enter into the participation phase and he didn't get greedy. He took 2/3 of what his expectation was. So he might have said, okay, from here to here is what I think. So I'm going to take it off here. That's what a lot of the big traders do. They wait and you patiently set your levels. Let's keep scrolling through. How are the Chinese stocks going? So we have here Tencent 475. 475. It's starting to form more base here. Take Two, I think they purchased Zynga. So that's why they were down so much. They're finding support. By the way, if you're into NFTs, I seriously think NFTs best play in terms of just money making is going to be in gaming, guys. It just makes sense. We're at the close now, by the way. So we just closed. Did we rally slightly? Yeah. Looks like we rallied right into our line. Funny how that would occur. There's the rally. There's the line. There's exactly where we expected to close. So across all of these stocks, a lot of hitting subs. SPLK actually did show a pretty large turnaround here. So Splunk, massive fall off since that CEO or CFO or whatever resigned. But this actually has a pretty nice base on it. This is one of the recovery stocks right now that's looking a lot better. Look at the price action here. Not bad at all. So SPLK coming back down to maybe an opportunity zone. But a lot of these other big tech stocks still turning. SE down 10. Can't touch this yet, guys. 20 moving average daily. Too much resistance. NFTs base themselves on ETH. Oh, we don't want to put that there. ETH coin. Wyckoff awaits here. NFT in gaming will be huge. Engine currently the leader. Yes, but imagine when the big blue chip ones get hold of it. Square's already announced they're putting it in their system. It's going to be a big deal. I mean, NFTs in gaming, just so much profitable. Kevin says NFT insert eye roll here. Oh, Kevin, I think you're wrong with the amount of money they're going to make in gaming. I mean, we already know the digital game tokens going, or digital game items going back as far as 1999 with Ultima, then into World of Warcraft, then into Diablos. I mean, some of these, even the, what was that stupid, I can't remember what the game was. Anyone remember the game during the 2000s that was like they sold worlds in it? And it was like you just stand there and talk to other people. God, I can't remember what it was called. Probably still alive too. Ubisoft signed with Engine. There we go. And Net got crushed, says Wise Guy. Actually, let's check out Net because I want to get Net this year at the right price. 98. Cool. Yes. Hasn't hit my alert yet. I've got an alert down here, but 88. I am looking for a turnaround in these stocks, these hyper growth cybersecurity stocks. They're getting much, much better price than they were. I mean, this was stupid. Sorry, guys. If you were looking at any of the stats on net, it was insane. Second Life. That's the one. That's the one. Thanks very much. You guys knew what it was. No, it's not Eve. FLC. No, not RuneScape. But look, even RuneScape. Look, think about how much cash has gone through RuneScape as a game. Counter-Strike gun skins, says Adrian. Exactly. Loot crates. Dota. League of Legends skins. Cosmetics. NFT is just an incredible profiteering way. Now, I'm not sure how they're going to get away with it with regulation, because that's going to be the big problem. But if you're looking at NFTs seriously, and you're wondering, I kind of like these, and I think that there's some money in them. Personally, my personal opinion is that NFTs are going to be incredibly profitable with game companies looping in MMOs into them, looping in RPGs, looping in MOBAs, looping in all these concepts into the game, bringing in a currency, bringing in a tradable whatever they're going to do. Worlds, you could almost think of it as there was another game a few years ago released terribly, and it was like just going to worlds and mining those worlds, but it was a 3D one. When you bring that together with profitability, you can make some serious cash. Gareth says games will be full of NFT swag. Totally agree. And Chantalo says best ways to get involved with NFTs. I just think it's going to be game related. I find it very risky to buy NFTs by themselves. These ones with 8 pictures, Bay or whatever, the crypto punks and stuff like that. Those types of NFTs are pure speculation. And you might get the right one, but boy, oh boy, 90% of them are going to be worthless. It's like the beginning of the crypto phase. Back in, let's think about the big crypto phase pump dump that happened in 17. Many coins never came back. If Activision gets a better CEO, don't start me, Thomas. Don't start me on Activision. Ooh, nasty. Let's have a look at ATVI. All the game companies are improving, though. You can see that their turnaround stories have improved here recently. But yes, this has one of the best IPs in the market. One of the best IPs in the market to get it done. They've got WoW and they've got the Blizzard side. They can make tons of money from it if they could turn it around. Thank you very much, Monica. 600 people in the chat, 143 likes. Hit the like for the TA and the community. Appreciate that one. Tom, go buy an Ionic 5, not a Tesla, and don't get sucked in by NFT. Well, I don't personally own any NFTs, but I was thinking of supporting my friend who had some pretty cool NFTs. I might show him maybe sometime. I just thought they were cool. Like, they're just cool because he made them, and I know he's an artist. So I like supporting artists. That's not bad. The Tesla has already been made, Kevin, unfortunately. So I'm not getting an Ionic 5. The Tesla is the way. US 100, 15,512. So we closed right on support. This is where the bulls have to come in the next session. I think day trading tomorrow could be a good one as well. It may be worthwhile looking at the open, looking at the first 3 hours of trade, and going into the 1 minute, 5 minute, 15-minute charts, guys. You're looking for turnaround stories coming off this support. And that's going to be one of the easier trades if it does occur. So if you're going to the smaller time frames, think about what happened previously when you had the support over here. So if you go to a 5-minute chart, I'll just show you. A day trader comes in, they see the sell-off, they see this turnaround, they buy that trigger, okay? Because it's coming off a key support for them. So where the Nasdaq just closed is theoretically a support. Support. The list goes on if we scroll out further. So because we're on key support and we closed right there, when we open the next session, if we see double bottoms, if we see lightning bolts, if we see turnaround in your smaller time frames, can you see why understanding the close, understanding the support or resistance we opened at will actually tell you whether the next session is going to be a good trading day, whether it's going to be a good opportunity. M3GA, we had a look at Intel just a little while ago. And Sandola77 with the $4 super sticker. Thank you very much, sir. Says, Happy New Year, Tom. Good to hear you doing the closing again. We appreciate your support and assistance. No worries, guys. And Tolga says, relax, guys. Check weekly candle for Nasdaq. A weekly close above 15,586 is bullish. Yes. You don't probably need 586 exactly, but it's still fine. People are really freaking out today, more so than usual. Like what Tolga's saying here is if we get above this area here, so really this zone of supports previously, then we're bullish. And I think you probably want to be above the weekly 20 if you can do it. But if we can't do it, we just need to be above all this previous support. But do not be, or be warned in general, this is not the period that technology tends to do that well. Remember, we go back to the chart. I've told you at the start in the first video, I'm bullish the market, of course. We're bullish the general sentiments, but technology is crappy in February. It's the worst month of the year for technology. Just statistically. So unless we see strong pull-off, you might love tech, but like we talked about, jets, other things are performing better than tech right now. So technology is not the, look at that take profit, bam, straight in, nasty, nasty market, semiconductor index here. So technology is probably the best growth sector. Everyone loves it. I know you guys all love it, but it's not the period of seasonal strength for it yet. So that's why the Dow isn't down that much. The Dow's only down 0.55%. Not much at all in comparison to the others. Same with IWM. This is not an attack across the board. It's hitting the tech sector the most. Jin says, so we buy tech now. Well, it's up to you. But I mean, tech, we just had a look at a chart that said Feb was pretty bad too for it, Jin. So you buy, if you're investing, you buy the levels that you want to invest. If you're trading, you look for the opportunity. And if you're swing and you want to start really getting involved in like a longer term bull run, you're looking for bases on the tech. And this is the hyper growth and stuff like that. And we haven't seen them yet. We'll be following it on the channel. Remember, subscribe, guys. We're definitely following it as much as we can. So let's go through some commodities into the crypto discussion. Let's see what's going on here. It's a quick check out on gold. Not much to report on gold. 1822s, come back down to 18 kind of 10 level and come back up. Unless it's above 1830, we don't really care too much for the gold right now. We need it to breach this zone, close above, and then we can see that rally to 1870. Silver, very similar. We're looking for a rally past 2340. That should signal further bullish commitment on both of these and a movement up. And this will be probably correlated with the DXY. Now, here's the interesting thing about the dollar index. Everyone's talking about interest rate, interest rate, interest rate. But notice the dollar index did it before when the market started getting the signals from the Fed that we were going up in rates. Then we've effectively consolidated, breached, come down to the trend line here on the DXY that we spoke about in the weekend video. And we possibly are going to close underneath the trend line. So DXY is starting to look quite weak here. And if it looks weak, you would think the gold should be even stronger than it currently is. So things like the euro, things like the pound, if you've been trading those, they had some amazing signals on them in the last couple of days. Currency traders are pretty happy probably with this large movement on the DXY. Let's move over to Bitcoin. One day we rally, the next day we fall. Mostly through the stock market, I would say this is why it's down. It rallied, created a bit of a new peak, probably got a lot of people trapped in this, then sold off. We're looking for buying right here, right now. We cannot afford for Bitcoin to go much lower than it currently has. Good news is a little turnaround here. We'll go down to the 2-hour time frame. See if that turnaround's showing. So yes, it is. But this base has to hold up, guys. We do not want it under 40,000. Bitcoin under 40,000 right now. This is us. Very scared. And we'll only have one tooth. One big buck tooth. That's all we're going to have, because every one of them is going to get punched out if we get below 40,000. We do not want to be below 40,000 right now in Bitcoin. We have the accumulation base. We have the turnaround story. We want to go towards 46. We've hit the support after breaching through. A standard rally should get us to this zone. The same thing for Ethereum. We want to get back to 3,600. Please. That's where we need to go. Resistance becomes support. It's got a hold here. Scott Morgan, $5. Do you ever look at long-term ratios to evaluate like VUG versus VTV? And how do we load that into TradingView? Well, you can do a comparison, but actually you can type in a pretty cool thing in TradingView. So say you want something like, I guess, VUG, which is the Vanguard growth versus VTV. Not sure if it'll work for that one. Let me just show you an example that I used the other day. So wait a second. So VUG/VTV. There we go. So you can type them in, and VUG/ the other one, and you can get your comparison. Now, this is a very cool technique, and I think this is why TradingView is quite popular and possibly one of the things. You can just type in these types of ones, get the comparison of the ratio, so the slash here, and then you'll get your ratio. And yes, ratios can be used, but you got to really use the correct ratio. So you'll see in the video the other day, I did Berkshire versus ARK. Now that's that idea of value versus hypergrowth, and whether which one had been outperforming. Now Berkshire, the thing with it is it does have a bit of Apple in it. So obviously Apple is not technically a value style play, but I guess it's about as value as you get in the tech side because it's such a big company. But in general, yeah, that's what you're doing. You're just putting slash whenever you want to convert it. So let's say we wanted to do BTC, if that was a code, or let's say we want to do copper versus, I don't know, the SPX. We could type it in and we can see the copper versus SPX ratio. So you're probably going to learn something just doing this today. I mean, most of you won't know that this exists, but this is how you can do ratios. So you see copper actually stronger than the SPX at this stage. And if copper was one of your leading indicators, which it can be used, I've already detailed plenty of times how copper can be used as a leading indicator of strength or weakness in the market. Sometimes these ratios can be quite good. Thank you very much for the donation, and probably that helped quite a lot of people, Scott. Gary says, what does the ratio mean? Do we read them like we would in Forex pairs? The ratio depends on the type of ratio you're using. So whether it actually means anything, and it's heavily used. Remember, just finding ratios or comparisons or TA or anything like that that isn't widely used by the big guys is pointless. The reason we keep it simple on this channel, and the reason why a lot of you guys really enjoy the channel, is because we keep it simple, stupid. That's the way we do. We use the KISS principle. If you try to find fandangled things outside of keeping it simple, then it will not work. Some of the ratios that we've talked about in the past that do work very well are things like Ethereum versus BTC. We've used these charts, or BTC versus ETH. We've used these charts plenty of times and detailed why we like them. We know that there is a standard rotation in crypto. Number one, we get BTC movement. Number two, we get ETH movement. Number three, we get, let's call them large coin or altcoin movement. And then number four, SC, which stands for crap, really crappy coins. You probably get the idea. I'm not going to say it because I don't want to get demonetized, but crap coins is the number four movement. So because we know this is a standard movement through cryptocurrencies, we can therefore use ratios to try to figure out whether there's some value in these types of things. So ratios are really good, and we'll probably do some more discussion on those. Thomas says Berkshire, huge part is the Coca-Cola. It's a big part, but it's not as big as we would believe in comparison to something like Apple. Apple is something like a quarter now. Shifty coins. That's right, Phil C. Shifty coins. Special coins? Yeah, special coins. That's the big one. And Ian says, that's pretty cool. Wasn't aware it could be done in TV. Yeah, there's a lot of things you can do in TV that they've added over the years that have been available. So all of the cryptos are down at this stage. Look, BTC and ETH, they're the ones that you really look for. Regardless of whether you trade another coin or not, this is your sentiment. And you can clearly see it. Ethereum probably shows it the best. We'll talk about in the daily video today all the accumulation base, the resistance breach, the pullback. You need rally here. Once you crack 34, I would say 36. From my opinion, do your own stuff. Obviously, don't use this as gospel. But at this point, if you crack 34, the next big potential here is 36. JR says, great tip on ratios. Yeah, it's pretty good. I will not leave till we get an explanation on SC coins. No, you don't want to know my opinion on the coins that are outside of, let's say, the top 100. Can you short them? You can. GT, you can short coins, but you need to use futures. And most of the futures providers don't provide futures on all of the SCs. So markets have stabilized at their supports. We'll find out. Next day is going to be a pretty big trading day. A lot at stake here this week now for tech, especially tech coming into earnings. We are starting earnings season. So remember, the ball is rolling. We're going to have JP Morgan. We're going to have all these big banks coming in only a few days of trade. It's going to be a big deal. And then we'll see tech come through. And it is a serious piece of weakness. So we've got the peak. Got the trough. We've got the potential of the lower peak coming off the 2 moving averages. We need to hold. So this is the day of rally. If we're going to rally, we rally in the next 24 hours, you would think, or we come down, bam. That's the best we can do. If we get underneath this 15.2 level, probably set alerts and close, next couple of weeks of trading could be brutal. The bears will be in full control at that point. They'll look to at least push down to this level, guys. So you're talking about, at that point, you're talking about another 700 points off. Just remember, and a top to bottom movement of around 12%, at least initially. If the SPX comes with you, even more. Craigo says short loaded at 37.07 on ETH. Are you still holding the short? That's pretty big of you there, Craigo. If you're holding a short from 37.07 still. Good luck. What about AMC, GME, those types of ones? Look, those years of it being a very strong kind of trade are probably behind it. I mean, once it gets underneath 20, it'll kill sentiment on this one. So I think they've broken the back of a lot of the strong kind of buyers. I think people have gotten sick of this. Remember, the human psychology is if you have a lot of gains, then you have a lot of hodlers. After a full year, I mean, this is almost a year now, yeah? When did it start? 1st of Feb 21. So we're almost on a year since the memes began. I can't believe it held up this long. I really can't. It's testament to actually the online communities they even managed to hold it. But eventually Wall Street gets their pound of flesh, and that's what they're doing at this stage. The sentiment is falling. People are going, well, why am I've got $10,000 here when I could have had 10K in crypto? I could have had 10K in Tesla. I could have had 10K somewhere else, and they're taking profit. And when you start breaking the straws, of course, the dominoes start falling as well. So I would say this looks like a dying chart to me. GME, very similar. I mean, this is bad. There's no doubt this is really bad. Not good. Anyone think this thing is coming back this year? I mean, it's the last gasp for it here for GME. I wish it wasn't like that, guys. And if you're holding it, it's all good. But from a TA perspective, it just looks to be weakening, and each rally is less and less and less and less. We haven't really seen an epic rally or a big push on the stock since November. We haven't seen a really big rally since June. So it's been sideways for quite some time. Kevin says, my airline has been strong. Tom, AC Air Canada. Yes, a lot of them are going. Victor says it is dead, guys. Is there any reason that eBay is down? Well, eBay, I've been losing. I think all of these consumer discretionaries are kind of losing these online shops. Increased competition, and in general, just probably weak sales due to their epic growth curve they had after the pandemic. What's happened so far? You had stimulus, spend. People buying services. This is the movement to services. And that's why jets are starting to move. That's why a lot of these recovery style service positions or tourism positions are starting to move. People want to get out. I mean, I'm one of these. I'm probably the perfect case. We were locked down. I'll be damned if I'm buying tons of stuff online right now. I don't care. I wasn't necessarily buying a lot over here, but I was buying a lot of computer equipment. Over here, for me, for many others, services is the key. And eBay is on support at this stage. If it gets underneath here, again, another incredible weakness for it. Very bad if it gets underneath that support. Be careful here. If I was looking at eBay, I'd just be sending an alert at 67.50, looking for a breach, putting in my own system, and then doing the concepts. Can you cover yields? We've done that one, gone in. So we had a look at yields before, and they're still all very standardized. So yields haven't moved that much. Bad seasonality on consumers as well. Exactly, Gary. If you're going to buy consumers, you buy them around that September, October into November period. Derek says, is the bottom in for China Tech picked up some FXI? Yeah, China Tech looks much better, doesn't it? So if you look up things like Barber and you bring them on the charts, it looks like the bottom's in for Barber. You can see here the base, the turnaround. I'm not sure I'm convinced in China as an investment. You know, the big problem here is actually going to be their zero COVID policy. They're going to have to change that. If they don't, they'll punish their economy very heavily. It's going to be a big deal. I'll leave it at that. But yes, these bases do look much, much better. I mean, that is the first base of this complete sell-off in Barber. But don't forget the overall trend line. So we have the first stage, and the second stage is getting through the trend line. There's a lot of runway here on Barber or these stocks. I miss you covering oil, Tom. I know I haven't covered oil. I'll do it in today's video. So oil just back down to the 4-hour 20. Hopefully it rallies off here. Still looking at to go to 85. Either this little 20 moving average here on the 4-hour should hold, or we hold around $80. At this stage, that's the thoughts on oil. Unlikely it stops at 83. Just seems like a weird level for it to stop. So generally, you would expect rally to 85. Not much else to say about it, really, other than that. Yeah, I think Djokovic is allowed to play now. I can't remember. Stupid. I don't really read the news. Kevin says, Snap, Shop, all got... Let's have a look at Shop, actually. People asked about that. Shopify. Oh, wow. Back down to 1,064. I haven't looked at this stock in a while. July 2020 price. Yeah, see all these online shops really feeling the brunt of slowed growth. Could be good opportunities in all of these later on. Let's have a look at Snap. 38 bucks. That's where buy the dip didn't work, guys. Some people, I remember this day, it crashed due to earnings. Heaps of people bought here. Heaps of people. I started looking at it here, no doubt. The supports. We didn't quite get the full rally we wanted. Looking for it to get past 57 to trigger. And we didn't. At this stage, $38. Not looking good here for Snap. TikTok probably killing it. And someone says, please tell me where Shop's oversold level is. You need it to hold here, man. Around this 1,025 to 1,100. You need to hold right here. Otherwise, once you get underneath this zone here, next stop is 892. You would think that it holds around this zone, though. A lot of it's going to come down to the NAS as well. If the NAS fails at that swing, so if you don't see a rally in the next 24 hours for the NAS, and the NAS gets underneath that big bullish hammer, that's where the bears will get full control. This will get obliterated. We've already done Microsoft and Nvidia, Tom White. Just go scroll through. It's about 15, 20 minutes into the video, I think. All right, guys, thank you so much. We appreciate everybody coming out. Thank you to the 630 people watching. At this point, is it time to panic? Just a quick summary. Just remember the weekly 20 is going to be the key here for the SPX. So we expected a pullback from the resistance. We've got it. The next open will be a very good point for a lot of people to come into the markets and have a look around. The Nasdaq closes around support. This is the futures, so it's still trading a little bit under. You'll be on the 5-minute. You'll be on the 15-minute looking for the turnaround story here. If you're a bull, you kind of want it to turn right now, right here. If you're a bear, you are getting excited because if the market gets underneath our trend line that has held since September 2020, we've been using this as a community. Remember, subscribe, guys, if you want more content. And also click the link that we've put in the chats if you're interested in getting some cheat sheets for patterns and things that we use, because well, it's always free, so there's no problem with getting it there. But if we get underneath this trend line, it's a big deal. Bad things are going to happen. That's where we don't want to be. And when I say bad things, opportunity. It's not going to be a massive crash that won't be met by opportunity. I don't believe that the biggest crash or some 30-50% doomsday sayers at this stage is going to happen. It's more likely a corrective move. It's going to be big. It will happen during 2022. There will be a move like this, whether it happens now or later on. And when it does occur, you're going to have a pretty good signal in place in terms of where your next stop is going to be. And I'll hopefully be able to show you guys the way I'm looking at it, if it does occur and when it does occur. Remember, most crashes do not get met by another crash in the next couple of years. They might get met by corrective moves, but the big crashes are usually multiple years apart. And part of that is stimulus. Part of that is the money going into the system and the fact that they've basically put on the last big fix for the markets until whatever the crash is in the future. And I've often said here, for me, it could be in around that 2026, 2027 period. There are a lot of reasons why that could happen. I go through it in the private group mentoring, but it's a long explanation and it involves quite a lot of my life's work in trading. So thanks so much, guys. We hope you enjoyed today's video. If anyone is interested in the mentoring themselves, check out Feb. We do have some slots available for Feb. And for anyone else, thank you so much for your support. Please smash that like button. We'll see you in the next video. And remember to grab those free cheat sheets as well. They might help you out. Don't panic yet. it's not time. The panic only happens when you get underneath the key technical levels. And we haven't seen one of those bearish busts since really the pandemic and the whole movement up here in the market. So it hasn't happened yet. For Ethereum and crypto traders, this is the time for it to find buying pressure. And you can see that on the 2-hour right here. Resistance becomes support. We need rallies and we need them here. Bye for now. Thanks so much.